The session we've got now is focused on Germany, and particularly Germany in the context of international opportunities. It's a super panel here. We've got Thomas Veith, Mark Holz, Till McCourt, and Tobias Schultheiß. Let's just start with quick introductions. So maybe if we could just come to you, Thomas, first, just give a brief introduction of yourself and the company.
Yeah, thanks, Richard. Yeah, Thomas Veith. I'm partner at PwC in Frankfurt. I'm leading the real asset business in Germany, 500 people staff, focusing on everything around real estate. I always say everywhere where the operating cash flow comes from real estate, it's my business. So it could be a loan, it could be a restructuring, could be an asset deal, a share deal, could be consulting business, a tax advice on structuring. So that's something we do with our team here in Germany.
Great, thanks very much. Tobias.
Well, thank you. Hello, everybody. I'm very happy to be part of this panel again. My name is Tobias Schultheiß. I am founder and managing partner of Blackbird Real Estate, which is a transaction advisory and investment boutique headquartered in Königstein with offices in Frankfurt, Munich, and Cologne. And from these offices, we mainly focus on advice and buying and selling commercial real estate. But some 6 years ago, we started initiating joint ventures together with mainly private partners. For example, just before we had the contact ban in Germany, we managed to sell our most recent joint venture, a long-term leased office building in Bochum, which is leased to the federal state of Germany, and we sold it to a listed company.
Perfect. Thanks. Thanks very much, Tobias. Till.
Well, thank you also to be invited here and have the opportunity to discuss with you. I'm head of research, Ziegert Group. Ziegert Group is a real estate consulting company, headquartered in Berlin, also offices in Leipzig and Frankfurt am Main. We are a corporate partner with Knight Frank. Main focus is the residential market. On the one hand, our business area is agency consulting for residential development, especially in the apartment market, condominium market, and agency. Then the other business area is investment development. We help investors to find plots to help them development projects for the apartment sale market. And then we have other business area with digital ventures with two companies. The one is MetaTrust, and digital platform for investors, investment products, and then also Everestate, where we have tried to figure out the best way to make digital way of agency consulting.
Great, thanks very much. And last but not least, Mark.
Yes, hi. Thank you, Richard, for having me on this webinar. I'm Mark Holz, heading research with Corestate Capital. Corestate Capital is a European leading provider of integrated investment solutions. That means we're doing investment management, fund management, debt advisory, asset management, property management. And we also run our own operation in terms of in the micro-living and student housing segments. We have strong roots in Germany, of course, but we follow a pan-European investment strategy. And we invest basically in all types of commercial real estate, as well as residential real estate, including the more niche products like micro-living, student housing.
Perfect, thanks very much. So let's start. Maybe let's start with you, Thomas. I mean, obviously, huge changes to the market in terms of the last, 6-7 months. But how do you see Germany at the moment in terms of investor confidence? Do you think it's still being viewed as a safe haven? I mean, we've obviously seen a lot of deal activity in Germany in comparison to some of the other markets. So I guess what's your kind of a take on the last 6 months and where we are at the moment?
Yeah, well, we have seen, of course, like in every part of the world, driven by COVID-19, significant changes, a slowdown in transaction activity in the first months. But as you said, the market came partly back. We see core plus deals in the market. with still good pricing. So that's a big discussion in the market. Will we see significant discounts or something? That's something we haven't seen that for the products that were traded. I think change is, of course, where the capital comes from. As before, a lot of Asian, Middle Eastern investors were active here in Germany. For now, the Germans are back, and the continental European investors are doing a lot of business here, as Germany, as a large economy, and even with the downturn we have and with the restructuring issues that will come up, compared to the other markets in Europe, is still seen as a stable anchor in the market.
Okay, interesting. And Mark, how do you see it just in terms of, I suppose, the context within Europe, if we look at Germany within the European markets?
Mm-hmm. Yeah, I mean, Thomas is absolutely right there. There has been a decline in activity in both fields, in the investment side, also in the leasing side. But generally, this was much better in Germany than in many other European countries, to be fair. If you look at the transaction volume, for example, that was down in Europe ex Germany by about 35%, while it was only down by 11% in Germany, so much stronger. And Thomas is right. There's a couple of reasons for that. First of all, it's the strong domestic investor base. We have many very potent German investors which do invest in Germany. Then, of course, you have the very strong performance of the German market over the last decade or so, which is still attracting a lot of capital. Germany has dealt quite well with the pandemic. So it was a little easier investing in Germany than in many other countries. And last but not least, there is, of course, the safe haven argument. And I think that is still very true. As I said, Germany has dealt quite well with the pandemic. It is still a very open and liberal economy. It has become very transparent and liquid. And these are all aspects that are attracting capital nationally and internationally. So that's pretty much the investment side. So way better than one could have expected at the beginning of the crisis. And also in terms of pricing, I can only agree to what Thomas has said. We don't see prices falling really. That was largely the expectation 3-4 months ago. But especially when you're looking in the core plus realm, there's still tremendous demand, I think, given the safe haven status of Germany. And this is strengthening yields rather than weakening yields. So there's a lot of still price pressure on the very core end of the market. When you're looking at the leasing market, I think the situation is very similar in Germany, like it is everywhere else. Activity was down in pretty much every market. We're talking about the office market now. So take up was down between 10%, which is good in Munich, but it declined by as much as 50% in Frankfurt and Stuttgart, for example. So quite a difference between markets, but the general trend was down. But honestly, that's largely down to practical reasons. It was simply very, very difficult to do site inspections, to go to spaces and actually lease spaces. And on top of that, of course, there's a big element of uncertainty. And in uncertain times, you probably not go and do your large-scale leasing deal. So so in that respect, people are sitting a bit on the sidelines. But well, again, that's a very European thing, not only a German thing. What is very German, though, is that we've gone into the crisis in a very good shape. So if you look at both the tier 1, tier 2, tier 3 markets, for both actually the commercial and the residential space, vacancy rates have been very, very low in the office space, for example, the lowest they have been in 20 to 25 years. The residential market is doing extremely well. If anything, there's an undersupply of stock, if you want. So we've gone into the crisis in a fairly good shape, and investors know that. And I think that is a major reason why it is still very attractive to many, and it is attracting capital and interest.
Okay, good. And Tobias, what have you been seeing? Did you see a pause in terms of sort of international capital interest? Was it more domestic capital for a period, or what's your sense of it? How do you see, I guess, the last 6-7 months, and also your kind of view going forward in terms of the market?
Well, actually, most of the international contacts we have, they were interested in hearing how we do in Germany, but they were not really actively looking to buy, but looking to stay in touch with me, with German representatives of the market. So and our transactions, that's only German buyers, like the core investors, listed companies. For example, it was at the beginning of March where we started marketing a core property long-term lease contract with the city at an enormously high price. But we are now just in front of granting exclusivity to one of these investors, and we managed even to increase the pricing, although it's the pandemic we have. So German buyers are still quite active. They are willing to pay prices as if there was no crisis. And in terms of what we see for the next couple of months, I have the impression that a lot of investors, international and domestic investors, that they took a break, that they did not do too much over the last couple of months, but now they figure, we did not spend any money for the last 5 to 6 months, so we now have even more money to invest. And this combined with the pipeline that is currently created on the buyer side, on the sell side, gives me the good feeling that we will see sort of a rally until the end of this year.
Okay, good. And obviously one of the one of the kind of I guess more successful, or at least perceived to be more resilient sectors was residential. Till so I guess how are you seeing that at the moment? What's your view on the sector?
I think the residential market, or the other case also say, is in good health, and is not really affected from the crisis we have here in the world. There's still a high demand, especially for residential development projects, and the numbers of developments are not increase, they're more decrease. We were also nervous at the beginning in the pandemic, what's going on the offer side and the demand side. But especially when we look in Berlin or other top 7 cities in Germany, the numbers of development projects are decreasing. And so there is not really an oversupply in the market. And there are more other facts who are important when we look on the residential market here, that has more to do with the restricted politics we see in the last 2 years in Germany, and also the discussion what's movement we are going here in Europe. And so I want to understand the development of the German city, and also the development of the German residential market in different cities more in a European context. Because if Germany, and that looks like how it looks at the moment, comes very well through this crisis, out stronger than before, after we looked for on 10 years well development business and economy in Germany, we will see more people moving in this area because there are a good economy. And I would still believe there is safe haven is definitely very important here. And then that is what we can see. But I think
okay, good.
Also,
thanks, Till.
Prices in the next years.
Thomas, just coming to you. How do you see? We've heard a little bit there from Till about the residential sector. How do you see the other sectors at the moment, whether that's office, retail, logistics? I guess, what are you seeing in Germany?
I think we have seen trends before COVID, which were now escalated by COVID, especially starting with retail. Of course, you have here food retail, which is strong, which is stable because the underlying business is doing pretty well. So I would say no dip in this food retail sector, but the non-food retail sector was under pressure over the last 2 to 3 years, and now there is a clear trend that it will get partly worse, not worse as in other countries like the UK, because the retail, let's say, a square meter per head was not that high than in other territories or in the US, for example. So we don't have so many insolvencies, but we published a study last week about retail trends, which is on our homepage. And the message is clear that people want to stay or increase the online or remain the online level which have increased during COVID-19. So that's bad news for the owner, of course. That was a trend already before, but now it's really driven hard, and it will be interesting to see how values behave over the next six months, because we also don't see significant retail transactions. I just saw the announcement today that Unibail tends to sell a 4 billion portfolio in continental Europe. Let's see how this works. Looks interesting. But owner currently more and more think about redeveloping existing shopping center, high street retail. We have 2 weeks ago, we've published a study about the new use of old warehouses. So there were 52 warehouses, the Kaufhofs, Karstadts, and Herties of the world, that were closed over the last 10 months, and we analyzed each of the new concepts they use. And the message is clear that the old warehouse model doesn't work anymore. So it's more the mixed use type inner city location that is the best, let's say, concept for this inner city large retail spaces. And it's also an opportunity for the city, because we have a large or big discussion about how can we bring people back to the city in the long term. And I think that's a good opportunity for the cities and the owners to have a good understanding of the reuse of this shopping centers. And that's a trend, but also last mile logistics is something that we can bring in the shopping center. So there are opportunities. It's not all bad, but I think we have to be open-minded and be clear that just moving forward as we did it the last 5 years in retail, especially in shopping centers, is not the way forward. And on the other, so pricing is difficult, but it was before. Investors are picky on retail, but it has just escalated. It was always the trend before. Hotel is, of course, I would say from the occupancy, the second burning part of the commercial market, as of course, the holiday hotellery is doing well in Germany, because a lot of Germans stayed in Germany in summer, so they are booming. But the typical business hotellery is really difficult, and the outlook is critical, as you see from the discussions. How will travel behavior change? How will touristic behavior change over the next, and that's not for 3 months, that's something I think we will see for the next 2 or 3 years. That's really something where we also have to look at what could be other concepts. Can we reuse these hotels for other short-term stays, micro-living, or whatever the trend might be, or typical resi? So that's also a difficult part, where we see also on the banking side and the financing side reviews of the existing loans. But in general, the banking system is still very cooperative. So we see a lot of waivers on covenants and also on amortization payments. So that's pretty cooperative. Of course, more and more mezzanine players are coming to market to find opportunities, also US-driven PE money, but still there is still a gap in pricing. It's still difficult to get this 15-20% IRR, or even 12 for MES, 12 to 15. But that's something that could help. The other sectors, office, it's as we heard before from Mark, I think we started into COVID in a market which was not overdeveloped. So the development pipeline was very cautious already. So if you look at the big markets, there are not high vacancy rates, and we have seen significant rent increases over the last 3-4 years. So even if rents might come down 10% or whatever, if you compare it in the mid-run into the past and into the future, is not such a significant change, and the discussion about do we need the office in the future? So my personal view is yes, we will. Of course, there will be conceptually changes on the purpose of the office, but in general, the office space overall will be needed. We published a study some weeks ago in the US on is urbanization something we will see going forward? It's for residential and also for office use. And the clear message is yes, in the long run, urbanization trend is still there, because if you want to, as a corporate, as a tenant, if you want to push your creativity and want to bring people together, you need a space where you can meet. And there is a clear correlation of the teaming up, teaming up of people and the performance of corporates. That's something our US colleagues have shown for the US, but they also compared to Germany and Frankfurt and Paris. So that's pretty good. And logistics is also something, a trend we will see on more onshoring. People or corporate tenants rethink their supply chain. That started 6 weeks ago, and we also see clear an increase in the demand for logistics space. The same for industrial in Germany, and this is the, let's say, the first answer to this nearshoring trend we will see more and more over the next years, I would say.
Okay, interesting. And Mark, I just wanted to pick up with you. Obviously, Corestate focused on a number of areas, but particularly also that sort of micro living, residential side, student housing. So just pick up on that, if you will, in terms of, I suppose, what you've been seeing, particularly because I guess that students will have started going back, like they have in the UK, particularly. So what's your sense of the, I suppose, both the last kind of 6 months, but also the prospects for those sectors?
Mm-hmm. It's quite interesting that you mentioned that, because the students in Germany, they have never left, actually. The occupancy rates in our assets that we have never fallen below 90% on average. So the portfolio was pretty strong, and it's back up to 95%, something in this range. So when thinking about student housing, I think you need to think about the very, very short term, and that is still clouded, because you don't really know what's going to happen with the pandemic, how that evolves, what the impact on universities is, and so on. So there's a little bit of uncertainty, but we're optimistic, given the experience that we had in the recent past, that it will work quite well in Germany. Then if you look at the mid to long term range, we will probably head into a period of longer, weaker economic growth. We will see headwinds on the labor markets. Unemployment rates will likely go up next year. These are all things that have not really happened yet. And I expect that to work itself through the system over the course of the rest of this year and next year. And in such a, let's say, more difficult environment, typically what we've seen in the past is that the attendance rate at universities is actually going up. If the labor market is more difficult, people want to have a high education as possible, and that is where they head back to the universities. And also, if they don't have a job, it's a good alternative then to go to the university. So to some extent, the universitarian tertiary student housing sector is sort of a hedge against an economic downturn. And thinking very long term, and that is why I personally think the student housing market makes perfect sense. What we have seen in the last 20 years in general is that tertiary education percentages of the population, degrees of university degrees in percent of the entire population, has gone up steadily. So the share of people with a high degree has gone up steadily. And thinking about the times that we are in now, and I have to think about the keynote speech from Sean Cooley earlier this day at REALX, which was amazing. So we are in a very disruptive times. There's a lot of automation going on, and all this makes the job profile becoming well. You need a higher education to remain relevant in the long term going forward. So I strongly believe that higher education will become even more important over the next 10, 20 years. That is why I think the student housing sector makes perfect sense. And talking about Germany again, this is a German snapshot. Again, Germany's in a quite good position here. Because, I have to mention Brexit for a second, where the UK is shooting itself in the foot. It's probably just more difficult for internationals to go into the UK. The US keeps fighting with China, so that's not helping their universities. In Germany, on the other hand, very, very open, liberal economy. It's safe, so it's in a very good position to attract international students in the short, mid, and longer term. That's why I think student housing actually makes perfect sense.
Okay, good. Thanks, Mark. Just a reminder as well that you can ask questions, share comments, and I'll try to bring those up as much as I can. If you're watching this session from the auditorium in the exhibition, then just open up a separate one for the web app or your mobile app, and then you'll be able to access this and also then send Q&As through. I've got a question here from Tristram Frost. Hi Tristram, good to see you, thanks very much. Which is, will the German planning system be flexible enough to allow for property repurposing? That's quite interesting because there's been a lot of discussion already today around repurposing, whether office might be repurposed, whether retail might be repurposed, and what for. Is that an element that is more of a challenge in the German market, and that's for anybody to pick up, really?
Well, we are currently facing this challenge in one of our joint ventures, where we have had long informal discussions with the planning authority, and they brought up the idea of repurposing the site from office to residential, say real residential, no what we call in German gewerbliches Wohnen. But then in this city, there will be elections in a couple of weeks, and it is for sure that the current mayor will no longer be the mayor on his own. He has to cooperate with another party. And all of a sudden, the ideas of repurposing it from office into normal residential is no longer on the desk, because there will be no political majority. So this is definitely one of the big challenges we have here in Germany. And 2 weeks ago, I think I was on a meeting at GIF, the German Society of Property Researchers, where one very experienced developer raised the question: why cannot we developers and we as a real estate industry, why cannot we get hands on defining the needs for a site?
Interesting. Thomas, did you want to pick that up?
Yeah, just an additional comment. It's a fair point. It's always a local thing, though. There's no general German law in place. It's always you have to go to the city, and they have to decide by themselves, find their political majorities for that. In general, of course, there is as I said, this warehouses. There was a clear trend and the willingness to support this, because that helps the city to bring the people back to the thing. So there are some positive things, but yes, there are a lot of examples where it just takes very, very long. For a developer, it's a disaster. It crashes all profitability of developments. But in general, there is also a bit of a mindset change about this mixed use types. Of course, sometimes you have the the feedback from the cities, yeah, they buy in for office, and then they just to increase their profitability by changing into residential because the exit prices are higher. So there might be some arbitrage sometimes, but in general, the willingness is there. But you always have to be look at it on a specific local level, and you have to take some time. Yeah.
Yeah, it's interesting. There's a session later on this afternoon actually around that kind of winning cities quarters, mixed use, urban opportunities, and I think that's a really interesting topic that's coming up at the moment. And just coming to you, Till, I mean, do you think that sort of restricts somehow the development of the residential because of the, you know, is planning an issue in general for that sector?
Well, the restriction is more focused on the old buildings in residential, especially in Berlin. We have to discuss here in the last months and last year, and we all wait for the Supreme Court to make the decision, is that law correct or is it incorrect? Or in German we say a Mietendeckel. That is also a risk or make investors also nervous here. And we saw that the supply in the market goes really decrease, and but the rent the rent price development we saw in the last month has nothing to do with Corona crisis, but it has more to do that the people couldn't move or they don't want to move if they don't have to, because when they move they have to pay a higher rent, and so why should they move there? And so on this part, that's still very attractive with a low interest rate here in Germany to invest their money not in a high rent in the cities, so invest the money in real estate, especially when they are owner occupier. And the restricted, I think it's very more interesting to see what's going on at the European political level. So sustainability will be more and more a very important fact in the politics, and what we have to see what comes there, especially for developers in the next years. And that has a huge impact. And I'm really sure that a lot of them don't see that at the moment, but that will be more and more important here. So that will bring also a change in the residential market, definitely in the next years.
Thomas, I can see you're agreeing with that.
Yeah, the ESG trend. So it's the fourth cycle I'm in, real estate cycle, and the green thing always disappeared at the beginning of the crisis, but this time it's clearly different. The ESG will stay. If you see the, I think last week the UN published the current research on the 17 sustainability goals that were globally agreed around the globe. And it really looks depressing, yeah? And nothing is moving in the right direction. And this comes down, of course, via the EU, the taxonomy, the Green Deal, and now also into Germany. And there are so many initiatives on tax side, like you see DAC 6, on the regulatory side for the funds, for green investment, and the taxonomy will also give more clarity over the 12 months. So that's a clear trend, and it's there, and it's really good. As Till said, especially the developer, they have the biggest driver, they are the biggest opportunity to change something at the beginning. They have to think about their ESG strategy. When we sit together with one of the largest resi developer last week with their management team and discussed ESG strategy for them, and it was pretty clear. And most of the players in Germany are not aware they are always doing a lot of things good because there are so many laws in place, but you have to really bring that together and to have a transparency. What do I have to do or what do I want to do on E, on S, and on G? And my personal view is it should be on the focus, because otherwise you will lose market share over the next 2 or 3 months. And it's coming. It's there. All the LPs have their ESG DDQs with them. They ask questions, and even the lenders are asked. You have seen some announcement from German banks that they want to increase their share of green financings, meaning certified buildings. Certified is only E, so there's much more to do. but they also give transformation loans, it's called. So specifically cheaper loans for assets that will be refurbished into the green standard. So that's something, it's there, and every player should be aware of this. If you are investing today in a German asset and want to exit this asset in 3, 5, 10 years, whenever, you have to have the ESG due diligence on the table already. Otherwise, you might lose money because the tenants asked for it, the financing institution asked for it, even the mezzanine asked for it, and it increases your potentially, or it decreases the vacancy, increases potentially rent. Cap rates are lower for this asset. So there are some value drivers which makes it already today very useful and meaningful to invest in, or invest into ESG conform building, or have a focus on how you can optimize your building into ESG standards.
Okay, good. Thank you. Tobias, I was just interested in that sense of, you're looking obviously at a lot of the, I guess some of the smaller cities. You're looking at different areas in some ways. Do you think that there will be more of a move towards these kind of secondary cities? I mean, we've certainly got that in the UK, where there's an aim to move towards some of the kind of secondary cities because people don't believe that they're going to be having to commute as much. Do you think there's an opportunity there, Tobias?
No, I don't want to have other investors in my market. And sorry for the background noise. I'm in a hotel room and there's some people working around me. So that was the fun answer, and the correct answer would be there is definitely opportunities, because you have since Germany is not a centralistic country like UK or France, we have so many regions, we have more than 450 cities only in Germany. All of them have their high streets, all of them have their commercial areas. And they are not yet really identified by institutional investors in terms of commercial building. Of course, residential investors have their stake in these cities already. And yes, I see a lot of opportunities going there, buying property there. And the difference to buying assets in top 7 locations in Germany is here you can still earn money. You buy properties at around 10 to a maximum of 15 times the rent, depending on the quality of the building and age and size. And you have an extremely stable rent. My portfolio, I did not have a cent lost in relation to the pandemic. I have tenants who asked for rent reduction, and I told them, yes, we can not talk about a rent reduction, but a later payment of the rent. But when I asked them for some statements how their business was the last 3 months compared to the year before, I never heard from these tenants again. So I think they just tried to get a rent reduction, but they are all still doing quite well. Some of my tenants told me they have a luxury problem because they work for the pharma industry, so they need more employees. They don't find them, so they can't make more money. But that's only my personal experience. Coming back to what Thomas said in terms of ESG, which I fully agree with, but I think the challenge would be for owners of these properties in smaller cities. Of course, you can force them by some new legislation that they have to convert their existing building into ESG conform building. But I'm sure that this will be a major challenge for us as an industry, because when I look at the typical sellers of my buildings, those are elderly people who owned these properties for decades. Now they want to cash out and spend some nice time somewhere in the Mediterranean. And if I tell them, yeah, I have to reduce the pricing by 2-3 years rent, they will just walk away. And then they don't know about this yet, and they don't accept it yet. And this is something where, as I said, you can force them by law, which I dislike. So on the other side, then the lawmakers have to put some incentives on place for these owners and the later sellers of these buildings.
Okay, good. We're rapidly running out of time. So just a quick one to you, Mark. In terms of things like rents, yields, what are we expecting?
Well, looking 1 year ahead or looking 5 years ahead?
Whichever you prefer. Let's look 1 year ahead.
Let's look well, maybe 3 to 6 months ahead at the year end, at the yield end of the market. I don't expect yields to move up in the very short term, at least not in the core plus space, because demand is just too high. The further yield development very strongly depends on how the income side of the property market will develop. And that again depends on the economy, which again depends on the pandemic. So this is rather difficult. My personal view is, and I said this before, that we will face more headwinds economically and from the labor market next year. So there's going to be more struggle at the income side. In the commercial real estate realm. So I do expect office rents to fall. I certainly expect retail rents to fall. I expect some parts of the logistics market to see rents to fall, while other parts like the e-commerce driven part, the more urban logistics part, might actually see rent increases. But overall, the pressure is more to the downside. And if your rents fall, business plans become more difficult, and that might lead to some yield increases, but not strongly at the core end of the market. The higher your risk, the more the repricing could be, obviously. But there's not too much going to happen. Certainly not this year, and also next year is going to be relatively muted in Germany, especially if you compare to other European markets. You're muted, Richard.
Very good. Well spotted. That was your test for the day. I was going to say we've got 4 minutes left, which kind of perfectly fits for a minute each, just to tell people where you think the opportunities are, where people should be looking. If it's international capital, looking towards the German market. So let's start with you, Tobias. Just in terms of opportunities, where should people be looking?
Well, this might be boring for you, Richard, because I told this the last couple of times when I was on your panel, but I still say, and I keep saying, go to smaller cities and look at the best properties there. I prefer commercial areas where I look at business park-like buildings with office and warehouse spaces. Why is that? Because you can buy these buildings rather cheap. There's no real demand for it right now. And for example, the cheapest building I bought was at 8 times your income, with a WALT in excess of 5 years, and a building that was in an okay shape. There was something to do, but it was no wrecked building. So go small cities, in one sentence.
Okay, great. And don't be afraid of consistency of view, Tobias. I think that's good. Till.
Well, I see still very attractive, bigger apartments and central areas in the top 7 cities. That's still also good investment. And also suburbias around, also now in Berlin, because that was in the last 10, 20 years, no topic here in this region. But the pressure in the market is high enough. Numbers of plots are not still there, so many in the central areas. So I still believe what we saw in the last 20, 30 years in other top 7 cities in Germany, you will see that also now in Berlin. And well-connected BC cities with good industry around should be also very attractive.
Okay, good. It's been really interesting to see how Berlin has developed over the last few years. Mark, what's your view?
Well, I have to add to the B, C, and D markets, actually. We also like the polycentric structure of Germany, and there's a whole range of very interesting markets behind the tier 1 cities. And within the tier 2, tier 3, tier 4 markets, we do like mixed use assets. We do like, you know, this city quarters, Stadtquartier Entwicklung, because they tailor to modern urban development guidelines. I think they perfectly tailor to what the tenants want, you know, a mixed dynamic urban profile. And yeah, that is pretty much what I would focus on over the next couple of years.
Okay, perfect, thanks. And last but not least, Thomas.
Well, B and C cities are sold out now, so prices increased already significantly. So I would go for a city strategy with more value add, teaming up with a local partner in doing redevelopment of existing office into green buildings and using the arbitrage in rent and cap rate over the next years, and be very rich then and doing fun things only.
Great, good. Thank you very much. Very good discussion. Thanks for all of your insights. That's been great.